That's a very good question. And I think the number one reason why you don't see high volatility in a pair like the euro versus the dollar is because both central banks are looking to cut interest rates. So you don't have that nice divergence in monetary policy. Instead, what I would suggest is to look at things like maybe the Australian dollar versus the Japanese yen, or the New Zealand dollar versus the Japanese yen. You can also look at things like Aussie dollar, Swiss franc, and New Zealand dollar, Swiss franc. Because there, for example, you have the Central Bank of New Zealand that cut interest rates with 50 basis points. You have the Australian Central Bank that already cut interest rates quite a lot and anticipated to cut even more with maybe 50 basis points by February 2020. So if you look at something like Australian dollar versus the Japanese yen, maybe it's trading around 72 today, and realistically, maybe the next 6 months or so, it could be closer to 60. And why I think it's like that? Because obviously Australia cutting interest rates, but they're also very closely linked to China and closely affected to the slowdown we're seeing across the world. I think what's happening in particular, which is quite interesting with the euro dollar and the euro in particular, is, as you know, like interest rates in Germany right now, a 10-year government bond yield is at negative 60, about 62 basis points. So I think what's happening over the last few years is that a lot of people have borrowed money in euros, and now at times of crisis, they go back and hedge to hedge those flows. So the euro is acting a bit like Japanese yen and like a Swiss franc. So it's like a funding currency. And I think that is sort of what's keeping the euro strengthened. Because you could look at other situations like Euro CAD, Euro New Zealand, where the euro is having a bit of support. Of course, it doesn't necessarily beat like the yen. Like if you look at euro yen, it's still much lower. The yen is really the really big winner here, and it has to do with bond markets going down and the slowdown. So we have the numbers from Germany. GDP numbers were not very good, published yesterday. You have as well a contraction in the UK. People think that the US is going to slow down more, and you had also industrial production from China moving down lower. So I think the winners going forward, at least right now, the way it looks like, it's going to be the yen, and not necessarily the big pairs. That would be, obviously the biggest strengthening would be in the Japanese yen. I think what can be interesting, though, is what happens with Lagarde. When Lagarde takes over from the ECB, I think she's going to be much more dovish than her predecessor, the current Mario Draghi. So I think that could see some big moves. And I think, the way this is looking right now, the US dollar will probably continue to strengthen more because on a relative basis, it's doing rather good. In other respects, of course, you have, currencies like the Swedish kroner, which is weakening a lot. You have the Norwegian kroner that are weakening a lot. But, for example, in Norway, they're actually raising interest rates. So we see that interest rates in general start to matter less than what they used to do over the last 10 years. I think the number one reason is that they don't want to upset Donald Trump so much. They already been called a currency manipulator, so they don't want to upset him too much by allowing the Chinese currency to weaken. But we need to be realistic about the current situation. The economy in China is not as strong as it used to be. It is directly impacted by these tariffs. So clearly the currency needs to go down. It's the same situation like here in the UK with Brexit, where the pound is declining. So it's very, very difficult, I would say. Not necessarily difficult, but it would be natural for the Chinese currency to weaken. At the same time, the US has a strong economy, and interest rates, and in general, compare the US interest rates with the rest of the world interest rates, they're very high, right? So there's going to be a natural inflow to the dollar, and it seems, unfortunately, that President Trump doesn't necessarily understand these mechanisms. And we'll see what happens, but obviously clearly not allowing the currency to drop because of the political situation. What's going to happen in the long run then? I still think it's going to weaken probably more. I think that would be the most thing, and it would also be a good way of combating these tariffs. Obviously, Donald Trump is not going to be very happy about that, and we'll see what happens in the next few years. We know for certain that Donald Trump is not going to be in power in 5 years from now because the way the system is built in the U.S., the political system, and most likely the leaders of China is going to be around at the same time. So you have that issue as well. So I think in the long run, the Chinese have some sort of control here.